Today, we're diving into one of the biggest stories moving through the technology sector and the stock market right now, and that's the global memory shortage that is sending shockwaves across the entire industry. This isn't just affecting one company or one product category. It's influencing some of the hottest stocks in the market, changing pricing power, improving profitability, and creating tremendous opportunities for several major memory companies. Let's begin with Apple because that's where the latest headline came from. Apple recently indicated that because of the shortage of memory components, it has to raise the prices of some of its products. That's a significant development because Apple is one of the world's largest buyers of memory chips. When a company of Apple's size starts increasing prices due to higher memory costs, investors immediately understand that the shortage is real and that demand is exceeding supply. That announcement sent another wave of optimism through the memory sector. Memory stocks were already among the market leaders, and this news gave investors even more confidence. Many of these stocks have already reached new highs, and the momentum continues because the underlying business fundamentals remain extremely strong. The market recognizes that companies supplying memory components now have substantial pricing power, something that historically has not always been the case. One of the biggest reasons investors are paying close attention to memory-related companies, particularly Micron, is because the market has traditionally viewed memory as a highly cyclical business. For years, memory manufacturers experienced periods of shortages followed by oversupply, causing earnings to fluctuate dramatically. Because of those cycles, companies like Micron usually traded at relatively low price-to-earnings ratios compared to other technology companies. But today's environment looks very different. Demand has exploded, driven by artificial intelligence, cloud computing, enterprise servers, and massive data center construction projects around the world. Instead of facing oversupply, the industry is dealing with persistent shortages, and that's changing the economics of the business. Investors are beginning to realize that this cycle is unlike many previous ones. Solid-state drives have become increasingly important across nearly every computing platform. Whether it's enterprise servers, AI infrastructure, cloud storage, or personal computers, demand for faster storage continues to grow rapidly. Because NAND flash memory remains in limited supply, manufacturers of solid-state drives are having to increase prices as well. That's one reason companies like Seagate and SanDisk have been performing so well. Rising prices improve revenue and profit margins, particularly when demand remains strong and customers continue placing orders despite higher costs. Micron occupies a slightly different position within the memory industry because it competes heavily in DRAM memory, the high-performance RAM used throughout servers, artificial intelligence systems, and advanced computing platforms. Competition from Samsung remains significant, but recent labor negotiations and operational challenges have affected Samsung's production environment. Reports suggested that Samsung had to reach agreements with workers that included sharing a greater portion of company profits, highlighting how demand throughout the industry has increased pressure on manufacturers globally. This isn't a situation limited to one country or one manufacturer. It's a global phenomenon. Every major technology company wants faster memory. Every cloud provider is expanding its infrastructure. Every artificial intelligence platform requires increasingly powerful hardware. Every new generation of servers demands higher bandwidth and greater capacity. As a result, companies capable of producing the highest performance memory chips now enjoy substantial pricing power. Pricing power is one of the most valuable characteristics any business can possess. When customers need your products and supply remains constrained, companies gain the ability to charge higher prices without significantly reducing demand. That directly translates into expanding operating margins and stronger earnings growth. Micron appears particularly well-positioned to benefit. Current expectations suggest the company could announce sales growth of at least 262% in the upcoming reporting period. Even more remarkable, the previous quarter produced earnings growth of approximately 936%. Those are extraordinary numbers and illustrate just how powerful the current environment has become for leading memory manufacturers. Of course, no business expands at those rates forever. Every industry eventually experiences slower growth, increased competition, or changing market conditions. However, many analysts believe this favorable environment for memory suppliers could continue for another 2.5 to 3 years. One of the primary reasons is the enormous order backlog associated with data center construction projects. Across the United States and internationally, technology companies continue building massive AI infrastructure. These facilities require enormous quantities of high-speed memory, advanced storage systems, networking equipment, processors, and power management hardware. Many projects have already been funded and committed years in advance, creating significant visibility into future demand. Micron, headquartered in Boise, Idaho, is also expanding its manufacturing footprint by building additional production facilities within the United States. Domestic semiconductor manufacturing has become an important strategic priority, receiving strong political and economic support because advanced chip production is increasingly viewed as a matter of national competitiveness and supply chain security. Historically, Micron always carried a relatively low valuation because investors expected memory earnings to fluctuate dramatically during industry cycles. Today, however, its price-to-earnings ratio has begun rising as investors recognize that current profitability may prove more durable than previously believed. Many industry observers argue that Micron currently produces some of the fastest memory chips available for advanced data center applications. Samsung also manufactures excellent memory products and remains one of the industry's largest players. But many enterprise customers seeking the highest performance solutions continue choosing Micron for critical infrastructure deployments. Again, pricing power becomes the central theme. When demand remains significantly above available supply, companies can maintain higher prices while simultaneously benefiting from improved operating leverage. Fixed manufacturing costs become spread across greater revenue, allowing profit margins to expand substantially. Some investors naturally worry that Micron's stock has already risen too far, too quickly. Those concerns are understandable because strong rallies often create fears of buying near market peaks. Micron also delivered a major earnings surprise during the previous quarter, reinforcing investor optimism that another strong report may be approaching. Many professional investors evaluate companies using multiple fundamental factors rather than relying on one financial metric alone. Sales growth remains extremely important, but investors also examine margin expansion, earnings stability, earnings momentum, analyst revisions, previous earnings surprises, and increasingly, order backlog. Order backlog has become especially significant during the artificial intelligence boom because many companies are receiving more orders than they can immediately fulfill. In some situations, backlog growth actually exceeds reported sales growth, indicating that demand continues accelerating even faster than current production capacity. That's precisely why data center-related stocks have become some of the strongest performers across the market. More than half of major commercial construction activity now involves data centers or related infrastructure. Every facility requires processors, memory, networking equipment, storage devices, cooling systems, electrical components, and specialized construction materials. Memory represents just one piece of that enormous investment cycle, but it's among the most critical. Wherever shortages exist, companies supplying those products generally experience stronger pricing, higher profitability, and expanding market valuations. The current investment environment has been particularly favorable for growth investors, especially those focusing on artificial intelligence and data center infrastructure. As AI adoption accelerates throughout the global economy, investment capital continues flowing toward companies providing essential hardware. One concept worth remembering is money flow. Stocks attracting consistent institutional buying often continue performing well because large investment funds deploy enormous amounts of capital over extended periods rather than completing purchases in a single day. Strong money flow can provide ongoing support for share prices even after substantial gains. That doesn't mean stocks rise forever. Corrections remain a normal part of every market cycle. Even strong companies experience pullbacks as investors take profits or react to short-term news. Micron itself has frequently rallied ahead of earnings announcements before consolidating afterward, displaying behavior somewhat similar to NVIDIA during previous reporting periods. Let's talk about Seagate technology. Although Seagate has long been recognized for traditional hard disk drives, the company has also benefited from growing demand for enterprise storage solutions supporting data centers. While spinning hard drives remain relevant because they provide lower-cost storage for massive amounts of data, the broader industry continues moving toward faster solid-state technologies wherever high performance is required. Seagate has earned a reputation for reliability and durability. Those characteristics become especially valuable inside data centers, where equipment failures can create costly disruptions. Customers operating mission-critical infrastructure prioritize dependable storage systems capable of functioning continuously under demanding conditions. As demand increases across enterprise computing, Seagate's financial performance has strengthened considerably. Both revenue growth and earnings improvements have impressed investors, contributing to the company's strong stock performance alongside other memory-related businesses. Even in powerful bull markets, investors should remember that short-term pullbacks remain completely normal. For example, after a stock rises 12%, experiencing a 3 or 4% decline shouldn't automatically be viewed as a negative development. Such movements often represent healthy consolidations before longer-term trends resume. Beyond the memory sector itself, several broader economic developments also support market optimism. Oil prices have declined below levels seen before recent geopolitical tensions intensified, easing concerns about energy-driven inflation. Shipping routes have continued operating, reducing fears of major supply disruptions. inflation data has also generally been encouraging. Core inflation measures, including both the Consumer Price Index and Producer Price Index, have recently come in below expectations, suggesting price pressures may be moderating. Artificial intelligence also plays a major role in the broader economic outlook. Many economists believe AI-driven productivity improvements could significantly increase economic output without creating equivalent inflationary pressure. Greater productivity allows businesses to produce more goods and services using existing resources more efficiently. A stronger U.S. dollar also contributes by reducing the cost of imported goods, helping offset inflation in various sectors. Finally, let's discuss SanDisk. SanDisk also benefits from favorable industry conditions, particularly within flash memory markets. Like Micron and Seagate, the company has shown positive analyst revisions, improving earnings performance and expanding profit margins. When comparing these companies directly, differences certainly exist, but they're relatively small. Micron and Seagate may currently receive somewhat greater investor enthusiasm because of their specific market positions and growth expectations. Nevertheless, SanDisk remains another participant benefiting from the same powerful industry trends driving demand throughout the memory ecosystem. Ultimately, all three companies are participating in one of the strongest technology investment cycles seen in years. Artificial intelligence, cloud computing, enterprise storage, and global data center expansion continue creating extraordinary demand for high-performance memory products. Companies capable of delivering the fastest, most reliable memory solutions remain in exceptionally strong competitive positions. As long as demand continues exceeding available supply, pricing power should remain favorable, supporting stronger revenues, wider profit margins, and potentially continued earnings growth. While markets will inevitably experience periods of volatility and corrections, the long-term structural demand generated by artificial intelligence infrastructure continues providing a compelling backdrop for the memory industry. Thanks for watching. Subscribe to the channel for more.